Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today the futures opened up a little bit. We had a pretty harsh reversal yesterday. We were, so excited overnight, Sunday night, that Spain was getting bailed out, $100 billion, blah, blah, blah. P.S. We sold off from the highs, from the open to the dead lows. So today we came in, right thing to do is short the open, right? Up 5-6 handles, good book says. Last night, take them short. Today, maybe, look to get short versus the up open, because if you didn't take them short overnight, you have a better cost average spot than some other people. And within the first 30 minutes, you got paid. You shorted the open. We traded through yesterday's low. There wasn't much traction. So the key during this past, I would say, few day trade was using the pivot low as a tactic. And on the spiders, I talked about 131.20 to 131.50, that let that be the floor you trade against. We briefly went below it, and then we reclaimed it. And I know I shorted the open, added to it, covered, made some money, and then I was like, I'm going to cover. I was out of the office, had a lot of meetings today, a lot of things going on, so unfortunately I wasn't able to participate as much as I would have liked to. But it seemed as though, same way on Friday, you had to follow through to the downside and could have reversed and made good money. Today, they gapped up, gave you a little bit of a way out of it if you were short. But if you got stubborn and rolled up your shorts, you're probably in a little bit of trouble. You're thinking, oh my goodness, I must be committed. Or if you covered your shorts, went long, you had a good day and you were tactical. And right now, tactical is the only way to go. And if you look at the chart here of the SPX, I want to show you guys a few things. All right, I lost my little toolbar here, so let's see if I could, open things up, which I'm not able to right now. Let's see if I could try and do it this way. Nope. Anyway, I've talked a little bit about this head and shoulders or inverted head and shoulders pattern. First, this was the head and shoulders top that yielded a really nice correction where you could have made money short, you could have been out of your lungs, whatever. P.S. Now this is where we are, okay? This is your left shoulder with the bottom of it being at about, what is this, 1291, that reactionary low before we had a bit of a bounce. Then, you had a big move off the lows right here. I'll get to this later, okay, because on the spiders, you'll see that this is an island bottom, which is a very technical bullish formation, even though we have very bearish headlines, but sometimes they don't always, coordinate or align, and you have to be a little bit careful. So P.S. we've been saying watch this area. See if we could hold higher, that once you get a move off the lows this way, that you want to see commitment. And as of now, there's been some commitment. You've seen some decent, participation anywhere between 1306, 1307, and today we closed on our highs. So let's go to the spiders real quickly. I just want to show you something. Spiders, again, it's hard to really show you here, but same type of scenario. We talked about 131, 131.30. Today we went as low as 131, what was that, 16, and then rebounded. If you want to look at the island reversal, we had a gap down on the jobs number, put in a hammer down here. You could draw this little line, right? This is your nice little hammer. That's when we reclaimed the 200-day. Laz had my system here, so I don't have my moving averages the way I like to. And then you had a gap up. So what does that do? That leaves you with a huge, I'm going to draw it, island bottom right there. And that means a lot of people got stopped out, a lot of people got short, then you gapped up, and now people are trapped. So what do we have here? We have a line in the sand, right? Here's your line in the sand. Right now we're trading against 131, 131.40. This low here was 131.78. This low here, 131.29. Yesterday's low, 131.28. Today's low, 131.16. So what did we all do? We held right here. We held 131. I'm going to draw a lot of little lines. That did not work as a short. You could have tried it. You could have tested it. And when it didn't break lower, you had to cover. Now I covered, but I didn't get long because I wasn't here. Some other people covered, used it as a pivot, and did fine. You look at something like Apple. Apple, I'm going to show you, also had somewhat of an outside day yesterday. We made really good money shorted, right? when it failed at the conference. It failed to announce anything so spectacular. No iPhone 5. Gapped up, traded below this little number here, which was 580. We made some nice money. Closed at yesterday 570.63, which was right here. I'm sorry, I have no toolbar up here, and I don't know how to get that back, so I'm trying to just wing it because, again, it just, I should have more supports here, but I don't. Anyway, so today we gapped up a little bit when it traded below 570.63. I know guys on my staff, while I wasn't here, shorted it, made some money, right? They went as low as 566.70. Nice $3-4. Calculated, because that's what you do. You try and stay with trades when you see some follow through. Kind of just like what we saw here. Remember when I had that 80-20 trade right here? I said, you know what? It's a short below 560.52, and then it made good money, and then it came back up and reclaimed it. Well, today you saw some decent money below 570.63 and some decent money above it. Nice pivot. That's why we talk pivots. Pivots are very important. I'm going to draw this line a few different times. Pivots are very important because it gives you a line in the sand to trade against. And there was a good money short and then good money long. And now it's a little noisy in here until we see some type of move perhaps back above 580, and that could give us some clues on which way the market's going to go. So that's Apple. JP Morgan, guys traded at 2. Look what JP Morgan's doing. It's still holding this lower support, right? And what didn't have enough strength that where you could have bought it yesterday, but then today it held the support just the same way that the market did. So here you still have an inverted head and shoulders pattern. Here's your king and queens little formation that, remember, we talked about buying it this day when they announced a $4.2 billion loss, and now it's holding higher. So we talk about summer trading. We talk about how within this range, it's great for little scalps, but nothing for macro or swing traders. But right now, the longer it goes here, sooner or later, this will mean something. Just not yet. Same way if we start to weaken, this will mean something. But for now, it's just a very rangy type trade that's holding higher. That's giving you a little bit of a constructive long bias. So I know Spanish yields went higher today. I know that everyone talked about Italy not being a place to be. That could be the next problem spot. I've talked about it. And typically I've had a little bit of short on the brain as well, but I'm trying not to have too many opinions. I'm trying not to bring them to the table. I'm trying to be objective. And right now, the two patterns that I see that have a bullish composure that have not failed yet is the island reversal at the bottom and the inverted head and shoulders where the right shoulder is building above 131 on the spiders. So the question is, can we break above this resistance at some point moving forward? I drew a lot of lines here. If you're coming in late, review them. This is the next big resistance. This is where it has paid to sell some, sell some stocks into resistance. Like I tried to point this out to you guys earlier this week, showing you how, look at the size of this range. This was August. The big move happened in late July, and then when we hit the low in August, the low here was 110. We then went to the high here of 121. 11 points in the spiders, probably 100 handles. From there, we went right down to the low here of 112, about 90 handles. From this low, if you said, oh my goodness, we're going to break this low, I want to get short, we then rallied back to the highs here of, what was this? 123, so probably about 120 handles. And then you had about 80 handles in the middle here before doing this fake out down to the downside. And then finally, I remember trading this, we broke up to the upside. But meanwhile, PS, from August to October, it took 3 months to build a lower pivot range that you lost if you shorted bottoms, you lost if you bought tops. Okay, so I'm not saying this is what's going to happen here, but it is only June. This was the first pivot low from the head and shoulders formation. So here you go. That was your sell. This was your measured move. And now we have a lot of time here. So Don't be overcommitted. Don't overtrade. Don't overdo it. Don't overdo anything. Overdoing anything never works in this world. It just doesn't. So at this point, you had a tip, a bit of a move from, just say this low is 129 to the high here of 134. So this was about 5 points. Then from here, from 134, you had a low to 127. So that was about 7 points. Then from this low, you had a move from 127 to the high here of 134, 7 points. So does it hold higher, and do we get another push? Or do we continue to do this zigzag, which frustrates many, but it also could make you tactical money? And sometimes you want to hit a double, a triple, or a home run. Sometimes you want to just tactically be safe, tactically put together a month, a few months, and then when you see more clarity, you start adding on more size because you see things clear. At this point, there's not much to see clear. There's still a lot more complicated problems in Europe. We still have the G20, and then we have the summit. We still have the Greece vote, and we still have our own debt problems. We have so many things going on right now and so many headlines that there's no need to be making big bets. But what you want to do is maneuver the range, put together some tactical trades, make some cash flow, and when there is a new trend, which there will be, the question is from where. Then I'd love to be able to hold 13 longs, the best stocks out there, use a tier system, have tier 1, add to them on breakouts, high five my neighbor, and be long. Or I'd love to be able to short, add to it to the downside, see follow through, and figure out an area where we could potentially put some money to work. But right now, we're in that little flux that makes it hard on everyone, where nobody really wins, and the only people who really lose are the ones that overtrade and the ones that don't follow rules. Scott Redler, T3 Live, the recap. See you tomorrow morning at the morning call. I will be here. See you then. Have a good night.